Good afternoon. This is Jeff Scott. It's Sunday, 10/15/2017, 3:25 p.m. And based upon the hour, futures are not currently out yet. I've entitled this week's review, Bulls Remain in Control. Probably should be an asterisk in there, as we are seeing some pretty interesting sector and industry group rotation. And the major indices stay the same or go up a little bit. But depending on what industry group your holdings are in, you may be seeing a little bit more volatility. As always, this is for education purposes only, and recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. I joke about the next comment that most physicians lose money with their investments. I certainly did before I took the time and made the investment of education. I'm not affiliated with any software vendor or trading company. Anything I use, I paid for myself. If I talk about somebody being good, it's because I think they're good, and learning from them has helped my trading. But as you see, how I trade is an amalgamation of things I put together to be me. And trading involves risk. You and your owner are solely responsible for any investment decisions you make, and that includes trading options, which the Options Industry Council would like me to remind you are very risky. And although they can be used to protect or supercharge one's portfolio, one needs to be fully knowledgeable of their use and their risk. I always call my education Be Your Own Guru. I've talked about these guys enough just to say I learned CanSlim. John Person really made it much more practical for me. CanSlim was improved by Morales and Catcher. Here's my buddy George Lee. Dan Tharp, the money management king, and position sizing. And then Guy Cohen, who's got an interesting indicator called the OBI indicator, but also has really well presented educational material and some websites which people might find to be easier than some of the other things. Just reminding everybody that John Person will be having a live meeting Thursday, Friday, and Saturday, November 30th through December 2nd. I will be participating some during that meeting, but I'll do my own meeting the Sunday after he finishes. They'll be at the same place. They are separate registrations. John is at personsplanet.com, or the phone number is here. If you have interest in my program, just a few details. It will be Sunday, December 3rd. I will demonstrate my favorite tools and strategies. Everything has moved up since I put this here, but it's been a very good year, merging what I've learned from Ian, John, and others. And the way I trade, I'm not living at my computer during the day. I can do this with less than an hour each night. And I do this for working full time as I try and build another successful company. Here are the topics. What it's really about is how taking what I've learned, using tools to find the stock, managing the trade, looking at option plays to increase return, helping you set up your own scans in TradeStation and Thinkorswim, and then finally putting it all together. Here's the housekeeping. Most importantly, $400 if you want to attend my meeting after John's, $500 if you're just coming to mine. I'm at about the 12 now. If there's one person that actually brought up 2 to 5 people, I have not had him follow through yet, but I will keep it open, and I can expand. Frankly, I could expand it to 40. I don't do this to make money. I want it to be good for the attendees. But I can expand it a little bit if I need to. So still open, and I'll go beyond 12 as necessary. And my email address is hgsidoc@gmail.com. Just to give you an idea of what you're going to get for your $400 to $500, you're going to get me unplugged. I work my ass off, as do most people when they do a live presentation. You'll get PDFs of all my slide presentations probably in advance the night before, so it can be updated. You'll get MP4 videos of the presentation. If I screw up my computer and the videos don't come out, then I'll retape it offline so that you'll get what I promise you. You'll get access to a library of old presentations. And then I have a number of Thinkorswim and TradeStation indicators, which I share. Keep in mind, I only share indicators that either I paid to develop or were freely distributed. I will not share any copyright or proprietary programs that I do not have permission to share. I have a lot of programs. I try to hide my desktop so we don't need to talk about them. I need TradeStation and Thinkorswim. Genesis is a great charting platform, but unless you're trading futures and unless you want to pay a couple grand a year for data, you probably aren't going to have Genesis. HGSI is my go-to analytics program. EdgeRater is a great product as well. I do believe in seasonality and a number of websites. I've been playing a little bit with a product that's called, let's see, I think of it as Q, C-U-E. It's from a company called, hold on a sec, superiorprofit.co. You could also look them up on YouTube. They've got some neat tools, and they've come up with some spreadsheets that I'm actually using intraday for looking at industry and sector group rotation. They've got plug-in for TradeStation and a plug-in for Metastock. If you have questions about it, I'm sure I could find the email to send you to the guy that runs it. Here's the website for highgrowthstock.com. The two key things to point out: free 30-day trial. They don't even ask for a credit card in this day and age. Crazy, but true. And then over here is investing strategies. And if you drop down your menu there, you'll see a number of videos that I've put together over the years. I try to do something like this, as crazy as it might be, on a weekly basis. And a lot of people watch them. Stock patterns are cyclical. You need to know where you are. This pattern is repeated whether you're an industry group, a stock, an index, and it doesn't matter what time frame. You'll see this pattern over and over and over again. Where are you? And it really has felt that we haven't seen this full run for quite some time. We've been in a bull run for a while. Timing could vary based upon whether you're looking at daily, weekly, monthly charts. But it's really felt like we've just bisected or took off the top of this, and it's like an oscillation. And every time I think we're rolling over, we go up. Every time I think we're breaking out, we go back down. So I don't think anything's changed there, except this. What we've done is we go up, sideways, we pretend to sell off, and we go up again. Sideways, pretend to sell off, we go up again. The net effect is we keep getting higher. I'm pretty in the market right now, but as I've mentioned before, I take protection on Fridays. I've got various option techniques that I take, which are not very expensive, and they're looking for the big drawdown. I could live to fight another day of a 2, 4, 6, 8% correction in the market, but I'm pretty much wondering when we're going to get the next major correction, 20, 30, 40%. I'm not the doom and gloom guy, Dr. Doom, but it's out there, and so it doesn't hurt to have a little bit of protection. That said, last week probably reduced my gains by 10, 15% of what I actually made because there's a cost to that protection, but it was a very good week indeed. Looking at how it ended on Friday, what stands out to me is materials across the board are strong. Those materials include chemicals like fertilizer, include some gold, it includes some steel. So things you could hold went up in value. Refiners and some of the energy plays, production side looked better. Services were mixed. Financials, you'll see that the interest rates came back a little bit this week or dropped a little bit this week. So no surprise that they were weak. Technology remained strong, including semiconductors. Mixed staples, discretionary, retail, utilities were weak on Friday. Healthcare, Trump started to unwind some of the Obamacare executive orders. And this resulted in some pretty robust sell-offs on Friday in some of the healthcare stocks, which were a good buying opportunity perhaps, as several of them rebounded later in the day. I mentioned gold and silver. Here's gold miners. They look very strong. Home builders weakened up. And here's some of the REITs. So I do that because it gives me a sense of what's working, what's not working. And that's on Friday. Now, I also like to look at the major market indices, and let's see if we can look at it better real time. Let me pause this, make sure I had my back. We're back, and let's just very quickly walk through the major markets and see if we see anything that's interesting. So the E-minis from 19 to 25, and this has been over the course of a couple of years. Here's the low of the market, which was back in February. The pullback in November, the reversal with the election. I would argue that perhaps this current bull market may have started back in February of 2016, but we're not really here to go through history today and look at that. But anyways, nice run from 1800 to 25, 700 into 800. 1800 is probably more than 30%. So we've had a big run up. We hit the all-time high on Friday close. This is on a weekly. Let's just go back to daily. And you can see on the daily a nice run up. And actually, let me just do this before I get myself into trouble. Let me go back here on the weekly, and let's just switch this to the daily one. So we've been in a nice uptrend, closing at the highs, all-time highs. OBV straight up, 17 above the 50, above the 200. Hard to say that's anything but a bullish-looking chart. At some point, we're going to have to worry about extension. The NASDAQ also closing, again, at another all-time high on the daily chart. And one can see OBV also strong. The Dow closing at an all-time high. Now, clearly, it's slowing down the ascent, as we're seeing across the board. The one that's the weakest right now would be the Russell, and we can see the Russell is pulling back in a flag. I don't think that's necessarily horrible. Perhaps the 17-day is a natural target for this to bounce, but the Russell's the weakest. And if we look at daily on the VIX, we are down to where it usually bounces. As those who followed me before know that a falling VIX is your friend if you're long stocks. A rising VIX is not good for your portfolio. One of the things that I bought were some options on VXX. Frankly, I hope I lose those money on those options, because that will mean the market continues to go up, and I probably would cover them Monday or Tuesday. And then the dollar had rallied from 91 up to about a little bit over 94, so it's a little bit over 3%. It's now fallen, and you'll see on the weekly charts, it's really sitting right on the 200-day moving average. This is in a downtrend, and you hear all kinds of stuff on TV about whether the dollar is going to bottom here, which would be, or continue to fall. And most of the things I see talk about continuing to fall. In fact, just to pull up my weekly charts, let me maximize this cell. You can see on the weekly charts a 10% drop in the dollar. This would be a natural place to drop, but if it fails here, it could fall quite a bit further. So I'll be watching the dollar, because one of the things I just said to you earlier was that gold and silver looked fairly strong. All right, back to the slide presentation. Those who are new, I do this for about 15 minutes to talk about the market. Then I do my top-down review using the charts. Again, on the weeklies, not anything different to say. The most important thing was the dollar. And I guess the only reason I'm putting this here is just to show you how perhaps the ascent, this would be the weekly E-mini, this would be the NQs, this is the TFs, this is the YMs, and then the NYSE is the fourth column down. top rows daily, then weekly, then monthly. And all I'm pointing out is that perhaps the ascent is slowing down. We remain in buy signals everywhere except looks like we have a sell signal on the daily Russell futures. The rates, you can't see it well, but this is the 10-year and the 30-year, and you could see they fell for the week, and hence that could cause some weakness in banks, as did some of the earnings that came out that were disappointing. Again, tough to see, but I've got the S&P in yellow, the small cap and large cap AD lines both reaching for the sky, so no divergences there. Now, the interesting thing is, here is the NYSE AD line, and then I put on that all the major indexes, and you can see up here, the orange is the IWM, the yellow is the spiders, the Qs are blue, and the green is the diamonds. And the only one that turned down this week was the IWM. So often the AD line will roll over before the charts do, and right now the AD line looks good. Breadth is strong. It's high. I mean, you could see the number of stocks above the 200-day and above the 40-day, and they're both getting to areas where you expect soon, but not necessarily yet, to see reversals, and we'll be watching that. We already saw a bit of reversal on the 3-month new high, new low, and then we moved up a little bit this week. So we are clearly in a range where an insult could bring this market down. And I think the market's ready for that. But be careful of the perma bears. This market keeps going higher despite this. The McClellan, the oscillator, has pulled back to zero. The summation index moves up. This is the daily, the weekly here. I look for extremes. We're not at an extreme there, so I usually don't pay much attention. Speaking of extremes, the buckets are the stocks in the S&P 1500. I'm looking at the individual stocks and where they are between their upper and lower Bollinger Band and the midline. Here I see that half or 70% are above the midline. That's bullish but not excessive, and very few stocks are above the upper band. In fact, below and above are kind of comparable. So I would say bullish without clear-cut danger. I look for Hindis. Hindenburgs occur at major tops. Think of it as the professionals trying to get out, and we're silly trying to get back in. And we could see that there are no Hindenburg signals for quite some time. So that's good to see. Market tone, still kind of choppy to bullish. I'm looking at the bandwidth, which is the weekly, the Woody indicator, not the weekly, but the Woody indicator, which is this third set across. Green is good, red is bad, and clearly there's not a lot of pain in here, but it's not a rip-roaring bull. If I look at sectors, financials and technology are green, the rest are yellow, nothing is code red. The canaries are a lot of the FANG stocks, and I put this together, or Ian put this together years ago, because these were the generals, and looking to see what the generals did might give you a sense of where the market was going. And, it's funny, 2 weeks ago, we were looking, 1, 2, 3, 4. We were down here, and I said it's at free parking, but don't know which way it's going to go. Last week, I said they were launching, and this week they launched. So we're at an all-time high on the canaries, and unless you don't watch TV or read, you are well aware that the FANG stocks, which are in the canaries, had a good week. Myself, I kind of live and die with Amazon sometimes. I have to do something about that because earnings are coming up this week. The index, this is an Ian tool that he taught us about over the last 20 years of taking the leaders in the market and then looking for them to roll over. The difference between this and the canaries is the canaries never change. But the leaders, when you think a market is getting extended, build an artificial index of 10 to 20 of the leading stocks in the market at that time, and know when that index rolls over that there's either going to be robust industry group rotation or the market's going to fall. We're going sideways with a bullish twist here, and I think there is underlying rotation. But when you look at some of the list, Align is still strong. Amazon strong. Boeing is great. Carnival is great. CBOE has done well. Facebook looks like it's ready to go again. MasterCard, Paycom done well. Um, there's some really good stocks in here. And there's a couple that have rolled over. So I think we have seen some rotation, but it's still bullish. Know your news and earnings dates. So if I look at the major economic reports, we got the FOMC minutes on Wednesday. I think people are going to be listening for tone, although people already are discounting in that we will see another rate increase in December. Weekly jobless claims will be important on Thursday. And then September, the CPI and the core will be out in on October. That way, you know what? I'm going to freeze that and redo that because that was this week. All right, my apologize there. Here's on marketwatch.com, and you could see this week housing starts on Wednesday, Beige Book on Wednesday, jobless claims on Thursday, Philly Fed on Thursday, leading economic indicators. So not nearly as powerful week as we don't have the CPI and others, and we don't have the Fed minutes. So apologize for that, but I usually use websites for whatever reason. The Bloomberg was not working today, and this is off of MarketWatch. The earnings are accurate, and I would pay attention to my quote in the lower right-hand corner. It is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. There are some whoppers here. You got Netflix, Morgan Stanley, Goldman Sachs, United Health, J&J, IBM, Abbott, American Express, PayPal, Philip Morris, Procter & Gamble, GE, Schlumberger. You need to know which of your stocks have earnings next week, and all of these are next week, and that's not an inclusive list. There are others that you need to know about as well. We're going to talk a little bit about Netflix and how I look at seasonality. Market thoughts, mostly higher. Tax cut discussions probably helping to support, well, certainly helping to support the market. Trump executive order weakens Obamacare, which impacts on hospitals and insurers. Decertification of Iran. I'm not sure if this means higher or lower oil prices. Do they pull oil, which would raise prices, or do they flood the market, which will lower oil prices? Is there conflict that comes out of this, which will raise oil prices? Risk still feels high. Risk of pullback probably exceeds likelihood of a major up move from this point. Indices are maintaining gains while underlying stock industry groups go through rotation. As I said before, the IWM paused, transports sold off, and the FANG made another move higher. So still caution is warranted. Protect your profits as earnings season starts in earnest. Typical agenda. I'm going to go off kilter a little bit. I have a Netflix position, pretty good Netflix position. I've been in it for most of the year, and it's got earnings coming out this week. So one question might have to be, what do I do with these earnings? So here is seasonality.com, and there's certain things that I learned from this. So I'm just going to start off on this side. So we're clearly in an uptrend. This is Netflix. This yellow line is a prediction of price based upon past results. We are at the top end of the range. I'd rather if we were sitting below the range. And earnings are due tomorrow after the market closes. Now let me go out of that and let's look over here, and I could see that if I bought Netflix on October 20th and sold it on December 5th, I would be up 70% of the time with a 13.8% average on the upside, 4.3 downside to the downside. So according to seasonality.com, odds are in my favor, 7 out of 10. Not perfect, and that green zone is something I like to see. Now, let me just look at Netflix in general, and people have been around know that I'll start beating you up soon about the January trade. Um, the January trade is the trade. This is the trade right here. And you can see if you buy on January 22nd to March 2nd, you're up 9 out of 10 times with a huge gain. So I would say that seasonality says maybe I pull back for a couple of days and then I take off. But seasonality is favorable, according to seasonalitytrader.com, for Netflix. Some of you may be old timers and use best choice. I looked at that one earlier today. It looks similar. Let's just look at Magenta Trader real quick. So the way I use this is I could be scanning and looking for good seasonality stocks. But what I'd rather do is find stocks I'm interested in buying or that I own, and then understand what the impact of seasonality is going to be on them. So let's look at Netflix. And you could see here, again, in an uptrend. Its annual growth rate this year is 111%. Its earnings are out right there, so we know earnings are out tomorrow. If you look at 30 days from this point, and you look over here, you can see 7 out of 10, they've been up. Here's been the returns. 2011 was a bad year for Netflix. Let's take a look at this. So again, we have suggest a short pullback, and then it goes higher. So I own a position. I've got some calls sold against my position. I'll probably hold Netflix, but I'll make my decision during the day. It's a great time to sell your Netflix calls because the volatility is high. I may sell some out of the money calls, more of them, and take advantage of the volatility crush that will be occurring on Tuesday. So next thing I like to do, people probably remember, is I like to go into TradeStation and very quickly, let's look at my 6 points on the indexes, and we'll look very quickly. We'll start with the E-minis, and what do we see? We see where it had been in a buy signal on the daily going back to August, the weekly, the monthly. We have blue, green, and green, so mostly a positive from the bulls. The blue tells me that the trend is slowing down. Notice this could end up with another up move. It could also end up with a down move. It just is indecision. Third thing is we're now coming back into the band. For the last 2 weeks, I've been saying we'll probably go sideways until we get back within the envelope, which we are. Notice the red dots up here on the weekly. That's some divergence. High jumps at 62 or bond goes green. I would say the concern here is that we're getting extended, as we can see these red dots on the weekly, but still appears bullish. If I look at the NASDAQ, buy, 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 green everywhere except for the monthly. The red dots, again, these will last a long time before the market rolls over. We're within the envelope, which is the dashed lines. We're at 55. NASDAQ, to me, looks extremely strong. The YM, uptrend everywhere. But again, like the S&P or the E-minis, we got the blue here and the red dots. But overall, looks strong, still needs to get in the envelope, so more sideways might be expected. And we know that the Russell had the worst week of all, but all the Russell's really doing, it's in an uptrend on daily, weekly, and monthly. It's just been in a prolonged go sideways move to get back within the envelopes. High jump had gotten higher here, as high as 89. We'll talk a lot about that at my meeting, plus give you this indicator, worth probably as much as the cost of admission. And bongos are green. So the Russell actually looks like this is probably a pullback in an uptrend. Just out of curiosity, this is an OVI chart, so don't get too confused, but I'm just going to look at and show you what I look. This is the Guy Cohen, and he won't tell you what's in this indicator, but when you see a flag, it gives you a sense if the flag is bullish or not. And interestingly, I'm not seeing the red. So I personally think this market's going higher, and but the fact that this is red, that's going to give me a little bit pause a little pause for concern. That'll be interesting to see, or I'd say neutral, not even red. Not here to teach a guy stuff. He has some great training programs, and feel free to try out his tools. We could look at the dollar very quickly. Notice the dollar's now got a daily sell, still in a weekly buy, monthly sell, red, blue, within the envelope, high jump bars low, the daily bongo and the weekly bongo are green. So the dollar, I'm neutral. I don't have a strong opinion either way. The VIX, a new sell signal came in on the VIX. The weekly bongo is strongly red. So this daily on top of the weekly and then the monthly, you sort of will get the bongo indicator for free. I can give you one time zone for free. I use a third-party indicator for the multi-time frame piece. It'll cost you $50 to get that, and then you can get the bongo 3 time frames on a daily chart. If you come to my live meeting, let me be very clear. I don't give away my indicators to people who I do videos for. That's not my business. But I do give them for free to people that come and pay to my live meetings. The gold is in a no buy signal. And by the way, the color bars are from Alexander Elder. They're called the Elder Impulse Indicator. So you got a buy signal here on the indicator and person's indicator. Interestingly, gold is in a weekly sell. If it moves up much from here, I suspect it'll turn into a weekly buy. The bongo is still red. So gold, short term looks good. It's still got some work to do. All right, enough of that. So I should have a good sense of what's working and what's not working in the market right now, and I do. So now what I want to do is go into HGSI, and let me get everything here cleaned up for this. When I do these videos, I have to change the resolution of my monitors and that. So sometimes I need to do a little bit of housekeeping here. All right, the chart's fine. And then we move the warehouse view. Perfect, 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 perfect. So the first thing I like to do in HGSI is I go into the designer and I find the Woodward and Brown groups. And I go into Major Markets Plus. I hit my warehouse view, and now you'll see 23 indexes. Yes, we just looked at them, but part of this is to educate you how to use HGSI. Go to the top-down view, which is T1. This ranks them on price and volume, so the things that have been moving the last day and the last week will come to the top. And you can get a sense that here's the small stocks were weak, volatility was weak, and interestingly on the week, biotech was weak. The strength was in oil, gold, miners, silver and gold, and NYSE, and the major indices were in the middle. That's interesting. Now, one of the things that you can do in HGSI, let's see if I can find it, is I could look at 1 week performance, which I did. I get a sense of what was working. So first thing I like to do is go down here, S&P 500. S&P 500 was up a little bit on the week. It was up 3.84% or 0.15 from end of day Friday to end of day Friday. Okay. Then I want to see where my stocks were on the week. And my stocks here were up 0.95%. I'll take that. That's a big difference. 31 winners, 21 losses. And then I want to look at the stocks that I picked to buy. And they were up kind of neutral to the S&P. And then the filtered buys were up a little bit more than that. Okay. What was working? Well, best of Woodward and Brown, strong, leaders, ERG, growth stocks were working. All my lists of growth stocks outperformed. So that's interesting. And the worst performers were small stocks. Bible gap ups actually must have been one that had a bad return. Some of the things that work sometimes didn't work this week. But the growth stocks were leading. That's important for me to know. Not how I perform, because I look at my balance and think or swim the trade station on a regular basis, but how did I perform compared to the markets? If I'm underperforming, I need to be thinking about why I'm in the markets. And I'm a growth investor. How did growth compare? All right, so let's open up the S&P 500 and very quickly go through how I use HGSI. I go into a clean view here. So I'm looking for certain things. These are the Hindenburgs. This is another way of looking for Hindenburgs. We haven't seen one in months, so we're not going to have much to say about the Hindenburgs. The top is the weekly bongo, which is my most effective long-term buy-sell signal. I like to be long when it's green and not go long when it's red, although obviously I can get in early before it turns. This is the weekly bongo. If I'm in a long-term bongo is green, so I'm in an uptrend this entire way. When the weekly goes red, it should drive me to look for pullbacks. I have an 8-day exponential, a 17, a 15, a 200 simple. Down here are kahunas. These are conviction moves. And typically I'll have OBV, but you're not going to see it, or volume on the S&P because they don't give volume. So as we talked about, it's an uptrend. Now, if I go into this view here, we add something called the high jump indicator. And as you could see, well, this shows that it was a red candle high, which means we opened up, traded up, and closed down on the day, even though we set a new high. But the high jump is in the center of the range, so I'm not too worried about the high jump. The next one I might want to look at would be the Dow. Up at the top, and you can see the Dow continues to set new highs, also nowhere near the high jump indicator. The NASDAQ continues to set new highs, nowhere near the high jump indicator. And then the Russell 2000. As we talked about, not this one. This one was selling off. Selling off is a relative thing. It hasn't flipped the bongos yet. Notice up here, case in point, the high jump is a way of mathematically measuring the greatest extension over a preset period of time, in this case, about a year. And when I get to that highest bar here, that tells me this is the most extended it's been over that period of time. Well, if it's the most extended, what do you think it's going to do? It's going to revert to the mean. So that's why I like the high jump bar, hence why I was pointing it out. Everything I show you should be in your HGSI. If not, either you don't know where to look, or I customize something that I'd be happy to give you. Again, continuing my journey, want to look at something that had a sell-off, look at transports. Now, I'm going to go back in. I don't know what the high jump was looking, although I have my guess. Now, they weren't up near the top, but they were in the top of the range. But transports had a bearish, engulfing pattern on Friday and reversed. It'll be interesting to see if they turn around and go higher, or if this is something, because this could be a signal of some weakness. Biotech also had a tough day, but sitting right above the 17, so it still hasn't given up much of his gains. We talked about the dollar pulling back to major support. And you could see it sitting on the 50 here. This is probably an important point for the dollar. Notice the weekly bongo is still green. The VIX we talked about in the trade station continues to be near the low of its range. Gold and silver, just to look at quickly because they might be at inflection points here. Gold reversed back here and seems to have moved above the 50. It has a new green bongo. That's intriguing to me. Silver also strong, similar pattern. And then gold miners even better. So you could be thinking things like NUGT. If this thing breaks above the 200 on the daily chart, might be interesting to see where this goes. Lastly, I just want to go back to where I was. I wanted to talk a little bit about corrections. There's no question the Dow is super strong. But let me give me a little bit more space, and then I just want to make my point. Now, one of the cool things about HGSI is what's going to happen down here. We went, let's just play some games. From the November 16 lows to the peak, we were up 18%. Then there was a pullback. That pullback was 4%. From here to here, pullback 2.4%. From here to here, 1.7. From here to here, 2.6. So we've had a series of pullbacks. For here to get down to the 50, that would be a 2.3% pullback. Does anybody not believe that that would not be a normal pullback? And one of the things that Ian likes to talk about is free parking, the 50-day moving average, how often it holds on these pullbacks. A little bit of a slice through, but quickly recovered. It'll be interesting to see. I think that we will get this. Don't know when. All right, next thing I want to do is look at industry groups. 07 is industry groups. And what I want to look at is momentum. So I like the 2-day force, which is today's price minus yesterday's price times volume. Plot that and take the 2-day and the 13-day exponential. And we're looking at the 2-day force here. I've got 44 groups to the upside. It was as high as 83. I've got 10 to the downside. To the downside are utilities, large pharma, semis, infrastructure, medical equipment, packaged food, telecom, cement, rail freight, and aircraft parts, kind of all over the place. More importantly, to the upside, that's where we're going to go look, and we've got 44. So let's take a quick look. We got some new things here that we haven't seen in a long time. Steel, that's interesting. Agricultural chemicals. Banks are here, at least diversified banks. Airlines dropped quite a bit, but they're still here. So I do is I right-click, change industry group. Let's take a look at these and see if there's anything here we might want to buy. Drop it down here. So this is Valet. There's too much stuff here. Let me clear it. Let me go. So I might want to, let me just, all right. I'm just playing around a little bit so that I can, all right. Again, when I change resolution, it sort of messes me up. All right, so let's look at a weekly of Valet. So stock's been in an uptrend off of the January 16 lows. On the weekly, it pulled back here to the 17-day. The 17-day, is like times 5 is about 85. 17 weekly. Here is the 50-day moving average where it's now boasted through. The weekly bongo is still red. It did have a kahuna, which is conviction coming in and a mobile breakout. Here's the industry group turning up. I'm not against taking a position in Valet. I'm not sure it's the best one, and it's been sideways, which is a negative thought on my part. And I would like to see some fundies. It makes money, not real impressive earnings per share growth. So this is Valet. Here is Cleveland Cliffs, similar pattern. Like to see it clear the 200, but notice the weekly bongo went green. Mobile breakout out of a squeeze. I like that. Kahuna. So this is one where I might, let me just look at this. Had a PSA reversal as well. The 200-day moving average is 782. It closed at 757. So I'd like to see it. Here's what I'd like to see. Not that the market cares what I'd like to see. I'd love to see this trade up above the 200, and I could take a buy if it trades above, say, 785. But what I really like to see is them pull back test and then take it off of that one. But I think Cleveland Cliffs looks interesting here. Like Valet, it's a beaten up stock. And here's Rio Tinto. More of an uptrend, mobile breakout, pocket pivot, Bible gap up, everything is green. Pays a 4.7 dividend. Like that chart more, although it's still pretty sloppy. I'm looking for tight charts. And I'm not going to go beyond the industry group. So a couple of the steel material providers look interesting. U.S. Steel comes to the top here. It's a stock that's been beaten down. I had a losing option position. Sold off hard. It's got to get above the 200, kind of like Valet, but I might be thinking about that. It's got green on the weekly bongo, mobile breakout here, squeeze. Industry group is strong, a pocket pivot, and a kahuna, so there's conviction. That might be interesting. Why do I say I want it to get above the 200? Because you might notice that over here, the 200 was support, and sometimes support will become resistance. MT breaking out here, had a, not sure why it's not a Bible gap up, a pocket pivot. Kahuna, everything is green. Earnings in another month. It has great earnings per share growth. Look at the multiple. AK Steel, beaten down stock, had a big move up on Friday percentage-wise. Bongo turned green. Nucor has to get above the 200. So in this group, U.S. Steel is probably the big kahuna, but even MT, I like that chart even more. I'll right-click, go back, entertainment content. These were a lot of groups, stocks that were beaten down and bouncing. I guess we don't have Weinstein's company on this one. That's probably not bouncing. Viacom B, selling off. This here is a high close doji. It's in a horrible downtrend. Kahuna's conviction. Look how the weekly bongo would have kept you out of this thing the whole way down. This was a green candle low. Sometimes you see that at a bottom. It's a bottom fishing stock. I didn't put this on my watch list. It was too far down in the pattern. 21st Century Fox, ditto. Class B, ditto. Here's the index of the stocks. It doesn't count. So I passed on this group. I did not like the patterns. Internet media, this is where a lot of the action is. Sohu had a big breakout on Friday. Doesn't make money. It's an expensive stock. I think it has a big position in BZUN, which is one of my holdings. Notice it had a Bible gap up. That's what this green line is from Morales and Catcher. It had a mobile breakout. It had a pocket pivot the day before and a kahuna. Earnings are the 23rd, so be aware of that. Snap, I'm not going to say what somebody else calls it. Starting to move back up. This to me is a failed IPO. I'm not interested. Facebook, it's one of my FANG stocks. Beautiful uptrend from the end of last year until the end of the summer. It's been sideways since. Is this thing ready to run? Might be. Something to keep your eye on. Good earnings per share growth. Twitter, I'll put that in the same category as Snap. Baidu, man, I could kill myself because I actually missed this one. I had an order. This is sometimes you have to forget not your mistakes, but if you don't get something, it doesn't mean you don't go back after it. I had looked for it back here in July, right around earnings, and I sold it when it pulled back here. That was a mistake because that became a big run. Baidu, big run up, expensive stock, but a leader. Google, kind of a cup formation. And then YY, one I like a little bit more. Great earnings per share growth, Chinese internet play with a lot of demand. I think this group looks interesting. One of the things that worried me some I do have a position in Weibo, although it's a lot smaller now. And the Chinese government came out and said that they want to take a position in these companies. That makes me nervous. If not, I would be talking about why I like this pattern of pulling back to the 50. Give me a kahuna intraday and I would be all over that stock. I'm a little nervous when the Chinese communists want to get involved. Semiconductors have been strong. I own two of the ones I'm going to show you. I own Applied Material. It's up at the top on the high jump bar. I'm nervous about it. I've tightened up my stop. It has great earnings per share growth compared to PE. I still like Applied Materials, but the risk is higher. Lam Research, expensive stock, looks the same. Taiwan Semiconductors, don't know much about this one, pays a 2.3% dividend yield. These are all extended, so you got to be careful. If you look in the past, when you hit the max, you usually trade it off. ASML, another expensive stock. ICHR, that's been showing up on the Palatuma IBD board. Nice run there, great earnings per share growth. Again, it's up at the high jump bar, so it's got tough to buy up there. And then Ultra Clean Holdings, another one with great earnings per share. This is a great group. I own Ultra Clean and I own Applied Materials. REITs, with interest rates falling, perhaps stocks that have a good interest rate will be more compelling. So we can look through some of them. Host Marriott, 4.1%, a sideways stock at the top of its range. So sometimes I look at something like this and I think of something like this. For the most part, the stock has lived within this box. I'd like to see it break out of this box. Oh, don't do that like that. And again, come back, retest, and then go to the moon. I'm going to watch it, though, because I think that's an interesting pattern. And I do like a 4% dividend. Simon Property, I hate the malls, but is the stock beaten down enough to be interested? Look at the group strength. It pays a 4.3%. I do like Public Storage and the others that are in the temporary storage because I spend a lot of money there just storing my baseball cards that my kids don't want. Talk about dumb investments, baseball cards. Breaking out here, more importantly, a 3.7% dividend. So the REITs look interesting. Agricultural chemicals. Now, Fred Richards was here. He could tell me what these mean, but there's some fertilizers here. Monsanto's in a takeout role with Bayer. I'm curious why it had a Bible gap up. If I right-click at HGSI, more info from the web. The magic of HGSI, it's going to open up FinViz with Monsanto there. See it broke above its channel. What were the news? Well, I guess they're believing that the deal is going to close. And perhaps that's why it's moving up. All right. CF Industry, you're going to see a number of agricultural stocks, a number of fertilizers. Here's CF, Cup, Handle, Breakout. Everything's green, out of a squeeze, Pocket Pivot, and Kahuna. Don't like the earnings per share growth, pays a 3.3% dividend. Mosaic, beaten down stock. Kahuna, Mobile Breakout from a squeeze, 2.8% dividend. SQM, a pullback, looks like it's ready to launch to new highs, 2.5% dividend. FMC, of course, I had it when it was lousy. Potash, an old name. Does it look like it wants to run? And Agrium. These are interesting. They all got the same basic pattern. They look interesting. I'll be playing one of them tomorrow, but I'm not sure which one. Now I'm going to move off of this and go into the group inclusion report. I did this a couple of weeks ago. I had a couple of questions, so I want to do it slowly. I can't do anything slowly. The hypothesis that I'm going to make is within HGSI, there's these things called smart groups. And these smart groups are done for you every time you update the program. And a lot of the best stocks in the market will show up. Well, we just went through 7 industry groups. We saw Applied Materials. We saw Facebook. We saw Lam Research. We saw Ultra Holdings, Vale, and YY. That's why you can do this in less than an hour. The hypothesis might be that if a stock shows up on a lot of strong watch lists, that maybe you need to pay attention. So here's how we automate that. We go into Tools, we go into Group Inclusion Report, we hit Clear, and we go Load Selection. And you have to see where I'm at here. App Data, Roaming, HGSI V8, User, WB, Group Selectors. I'm going to hit 1. And I want to make a group from this. And we'll just call it, all right, that's fine, Bull Groups 1015. Now, you'll notice there's check marks through some of my favorite groups. I'm going to add to this because this is something that, save selection. All right, I'm going to hit OK. Yep. A lot of fantasy football seasons ended today with Aaron Rodgers getting a broken collarbone. Fortunately, he was not my quarterback. All right, now I'm going to open up. These are the best stocks in the market from the being in a lot of inclusion reports. And I'm going to come back here and I'm going to find what we just did, which were oh, I know I just did that. Where'd they go? Look at that list there. That should be that list, but let's just see. Here it is. Nope. Bull groups. Oh, that is the list. Okay, I did it wrong. Oh, I didn't make a group for the report, so let's try that again. That's why it's not there. Test. Yes. It'll pop up here. All right. Now, let's go into this group here, which is what I just made. Why are you not showing me any securities? All right, I'm going to stop. And the reason why there's no securities is because I had number of securities 0. So let's just put 15. Let's get the top 15 groups from this list into a watch list. And then let's go, no, that's not the one I want to use. And we'll go look at that very quickly, and then I'll sign off. So here's how you can very quickly know what's working, what's not working in the market. It should be in here, perfect. So let's do a couple different things here. Semiconductors, steel, internet, e-commerce. This is where what's working right now. Let's look at these very quickly, and then I'll see if there's anything else I want to say, and then we'll say goodbye. Huntsman, lower left, upper right, breaking out over prior highs, everything green above. Kahuna's, pocket pivots. This looks great. Earnings per share growth greater than multiple. I like that look. Bank of America, interestingly, it had earnings came out after trading down, traded up. It's in a little bit of a pullback. You might want to wait till it breaks out above the recent highs. Earnings per share growth is there, pays a small dividend. Netflix, we talked about it, has earnings. Earnings plays are their own separate But if it didn't have earnings, it's breaking out to new highs. 58 com uptrend, pretty impressive uptrend, frankly. That's why it made it to the list of what's working the best. The uptrend from here, and I think it goes even better. So if you had bought down here when you had this clump of blue, you'd be up 143% in half a year. Well, that ain't happening. So you have a strong uptrend, pullback, and then up to the 50 here, and then it's breaking out again. It's kind of sloppy when I look up here. Not a stock that I'd be chasing. I've mentioned that BZUN is another one I have. Again, the same issue as Weibo, will the Chinese government try and get involved? This doesn't look good here, okay? Therefore, when I see zero, I go to other places. So the other place that I might go to is MarketSmith, and just sign in. This is, again, as I said before, this is not the computer that I usually use, so it's not always up to date on all my stuff. So this is BZUN, but I love this resource to look for earnings and other things. They got some good scanners of different things. Here's what gets me excited. 69 cents in 2017, 100% up. So it's trading at a multiple of 78. 2018, $1, 62%. I think the stock could go to $60 a share. It's trading at 35, trades 3.6 million shares a year. So when I saw the zeros, I would have lost interest, but I think it's got good earnings per share growth. And notice strong uptrend, getting loose here, pull back towards the 50, pocket pivot, kahuna, and a mobile breakout.
I'm leaving.
Okay.
He's watching.
All right, continuing on, NIMI Holdings. This is a insurance play, breaking out here, had a Bible gap up on Thursday. Kemet, man, I've talked about this a lot, a semiconductor stock. I'm going to kick myself in the ass because I thought about buying it here on the pullback and I missed it. And it's running again. Look at the earnings per share growth. NVIDIA, this has been the big leader. XLX's Tech, another Bible gap up in the technology space. Look at the earnings per share growth compared to the multiple. Now, I don't know this enough. I don't know the sustainability of that. So I might go up here, ACLS, and I might see, and I see 36% in 2018 on $1.70. 36 times $1.70. 30 is 50. It's a $30 stock. I love growth stocks. Brooks Automation, we talked about this a couple weeks ago. It's been in a nice run off of here when I called it to your attention. Lam Research, another leader. UCTT, we already talked about. US Steel made the list. That's interesting, I think. And then Valet. Don't know Jupay Holdings, but I can see why it made the list from 8 to 22, a little pullback here. This one you need your research on. I have a feeling it's Chinese, but let's just quickly look over here. Hit enter. I don't see any fundamentals. I can't buy it. Interesting chart pattern, though. So the point there was to do a group inclusion report. Step one, go to designer. I'm going to do this very quickly because people say I didn't do it quickly. I didn't do it and teach them. Click on designer. Click on tools. Go to group inclusion report. In group inclusion report, go to load selection. I like top 50 GIR. Notice up here where you're going to find this at. This is where Crazy Windows sticks things now. That's where you're going to stick it. It's going to populate. I added to the basic one PSAR reversals, pull back to the 50 with a kahuna and my 3x volume. I then make a group from the report. You call it whatever you want. Jeffrey test. Don't do what I did, which is forget to put securities. You want to look at 5, 10, 15, 20, 30. Hit OK. It's now going to ask me whether or not I want to save it. Sure, I'll save it as my GIF test webinar. It's then going to go through and see which stocks make the most groups, and it's going to show me here. Exelixis was in 12 groups, as was Netflix, Nvidia, Vale, Jupai, NMI. So any stock that's here, look at the groups it's in. Tells me it's a semiconductor, it's a sprinter, consistent earnings, 52-week high retracing, high ERG, leaders, quarterly acceleration, stocks and groups to the upside, strong EPS near 52-week high, had a force index pocket pivot, had a pocket, and then two other way of calculating pocket pivots. I'd probably reduce my pocket pivot count in this and take that out, and I'll show you how I'm going to do that. So I might go back here and say tools, group inclusion report, load selection, now, my concern was there's too many pocket pivots. So I don't need them all. I'm just going to leave them 5 and 10. I like the one. I'll leave the force one in. That's code blue. That's fine. In fact, I'm just going to leave the force one in. I'm going to hit save. Scott mod. Now I'm going to hit save. I'm going to hit make a group. Hit OK. I'm just saving these as test. Replace, yes. All right, so there's a little bit of a rotation because I took out some of the pocket pivots, but it's the same stocks. And to me, there's no better tool in the marketplace that I can do in 2 minutes that shows me the best stocks. On that note, I hope you all have a great week. If you have interest in attending, let me just go back to my live meeting because someday I just want to cut it off and give a number. There's still openings. I can put a lot more than 12 in the room. I made a comment before, I don't do this to make money. I don't. I've been very fortunate in life. I like to teach and I like to carry on the learnings that Ian Woodward brought to the market. That's why I do this. I do it to break even. If you don't believe me, come to dinner on Saturday night. It'll be over the top. Why don't I just do this for free and not take you to dinner and do it at a nice hotel? Because people don't appreciate things that are for free. So I give back more than you pay in goodies. It'll be a great time. Love to see you, but you better reach me quickly because I'll shut it down eventually so I can give my final numbers. You all have a great week. Trade safe. Beware corrections occur.